Guys, Ford and GM just reported earnings, so I'm going to do a comparison between the two. Now, I did a deep dive into Ford because Ford they released their outlook for their EVs, and their EV space was very, very interesting. They said that they had secured enough material to make 600,000 EVs by the end of 2023. Now, this isn't saying that they were hoping to do it. They weren't having to worry about supply shortages because they actually had the material that they needed to make 600,000 EVs, which was incredible. They also said that they have 60% of the materials that they need to make 2 million vehicles by the end of 2024, or maybe it was 2026. It doesn't matter. The point is, they don't have to go based on like these Rivians and these Neos, hoping that they get the supplies to come in to make these numbers. It's incredible. And that is kind of what made me look at Ford and go, all right, I think I need to be looking at Ford because it is getting so cheap right now. What kind of price can I give it? What kind of valuation can I give it? And do I want to buy this stock? So looking at their quarterly report that they came out with, they crushed it on a lot of fronts. They had increased revenue. They started to increase their market share. So looking into 2019 going into 20, they decreased their market share and they had slowing of vehicles. Now, it did make sense to me. We went into a pandemic. It made sense that things were slowing. Then going from 2020 to 21, they had another slowing in growth, another slowing in market share. That one concerned me a little bit more, but it really didn't because what happened in 2021? Well, we were still in part of the pandemic in the beginning of it, and then we started facing a lot of these supply chain issues. The question now becomes for all of these car companies, who can navigate their way out of this the best? Going into this earnings report, Q2 of 22, they were back. They started to regain market share. Their sales were going really well. And now, their EV space was growing greatly. So here was the plan. It was 2 million vehicles by the end of 2026, not 2024. So that was number one. Now, my question was going into the value play. Am I putting too much reliance on EVs? Is that what Ford has going for them going forward? Is their trucks and cars going to stay where they are? And I'm hoping that EVs do more. That's the question that I had to ask myself and the reason that I did the deep dive. Now let's scroll down further. Here were some of the key metrics getting into the market share that I was talking about. 2021, 4.9, 2022, 5.3, which was really great. Now, in the first half, they went 5.1 in the first half of 21 and 5% in the first half of 22. So a little bit lower, but not much of concern. I'm not really worried about it going forward. Let's see, did I highlight anything else in here? This was another big thing. Ford is kind of selling. So they're going to have their Ford Blue. This is building out their internal combustion space, continuing with what they're doing. Their Model E, of course, they have the Mustang and the truck that's coming out now. And then Ford Pro, they kind of diversified that into its own commercial space, which could put a lot of focus into certain areas so they don't have to be so scattered with all of their teams scattering out and working in different areas. Now into the numbers. Ford posted a revenue of $40.2 billion, which was a 35% increase in wholesale shipments, which was awesome. $667 million, margin of 1.7%, including a market-to-market loss of their Rivian, which was a $2.1 billion loss in the quarter, something like that. So the Rivian investment is curious to me. I'm excited to see what happens with that one going forward. But when we get into their forward outlook from their CFO. Adjusted earnings before income and taxes, $11.5 billion to $12.5 billion, which would represent 15 to 25% of growth from last year, which would be absolutely incredible. And their cash flow, they intend to be increasing that too. $4 billion in headwinds that they're going to be facing from commodities. This is going to be interesting, not only for Ford, but for every single car company. Now, going into GM, before we get into Stock Analyzer tool, GM was a little bit different. They were coming in, increasing revenue. This is a company that I'm not so focused on. And let me tell you, going back to 2008 in the recession, there was one major car company in the United States that didn't take a bailout, and that was Ford. And to me, that tells me about their tenacity to get through tough times. I mean, I have to think we're coming into a recession, especially with this GDP number that just came out, 2 consecutive quarters of contraction. And that is the reason that I was liking Ford more than GM. Now, GM did increase their revenue in the second quarter compared to 2021. Net income, however, it did fall. And this could be, their margin dropped big time too, 4.7% versus 8.3%. This could absolutely be from commodity issues, supply issues. I have spoke to people in the GM world. I did put an order in for a GM truck, and you cannot get the trucks. The trucks are very difficult to get right now, I should say. Now let's hit Stock Analyzer real quick just to see. Now, let's look at 8 pillars first. So this is Ford's 8 pillars. Now, shares outstanding, this doesn't concern me at all. 0.8% doesn't concern me at all. The debt level, I did go and look at the industry. Toyota has debts. Honda has debt. Every car company has these debts levels, so it's fine for me. Return on invested capital, not thrilled with that. And of course, the growth number, that's not surprising though, coming out of the pandemic. Now, let me put in Stock Analyzer tool for this one. I am going to tell you guys right now, I stress this thing. I put these low numbers, I put in very low numbers because I was not sure exactly what I wanted to pay for this, but I knew that I wanted to get a deal. It was because I don't like investing in car companies. So negative 3% revenue growth on the low side, 0 and 3 on the high side. Remember, guys, I am stressing this algorithm right here. Profit margin. I'm going to go 2, 4, and 6. And free cash flow, I'm going to do the same thing. And 6. PE. Now, I'm going to go 10, 12, and 14 for PE. Price to free cash, I will stick with the similar number. I just want to see, and I can start tinkering with this afterwards. Now my return. I'm going to put in a 12.5% return. And the reason is, I don't think that Ford is going anywhere. Now, if this was a less well-known company, sure, I would want a little bit more margin of error in there. And right now, here it is, the big range. But remember, I stress the heck out of this. Current stock price is $14, $5 to $24, depending on what you believe. I think that I was probably sitting somewhere in between here. I was sitting at about $8 per share. So it was $8 per share that I was looking at, and that was really heavily reliant on EVs. So let's go to GM and let's check out the 8 pillars here. Shares outstanding, they're buying back. Again, debt levels, it's an issue in the industry. ROIC, issue in the industry. Growth, issue in the industry. So those numbers don't necessarily scare me because they're industry-wide. Now let's go and Stock Analyzer this. This one I have not done. So taking a peek at this negative, let's go again. Let's go negative 3, 0, and 3. Again, these could be low, but profit margin, let's go 2, 3, and 4. I think that's probably fair for, especially with the commodities issue that's going to come out. Now, free cash flow margin, I'm going to give them the benefit of the doubt and go 2 and 3 and 4 there. PE, I'm going to do the same, 10, 12, and 14. 10, 12, and 14. And I actually, for my desired return, I may go a little bit higher here. I think I might go with like a 13.5% because it's a little bit more worrisome of a company to me than Ford is. 13.5, 13.5. Let's see here. I'm curious to see what this spits out. $35.50 per share. And here's your numbers. I mean, let's call it $12 to $40. So maybe somewhere, if we're going about the same thing, maybe it's somewhere in this $17 range you start to look. But again, car industry is very different. Car industry, you have union issues, you have supply issues, you have a lot of different issues that factor into this. Now, guys, if you're interested in at all trading these things, let's look at it. Let's make a comparison on a long-term chart. Which one is better? Ford. So if I'm looking at Ford, right now they got a big bump up today. Looks like they're trying to move through that sweet spot, but they face, oh my gosh, they face so much resistance. So if I'm you, I'm probably not touching Ford from a long-term perspective. I'm probably going to look at it more from a short-term perspective, maybe on a swing trading chart. I could have just left those lines there because it's exactly the same thing. Trying to move through the sweet spot, but what do you see? Resistance, resistance, resist. This is going to be a very, very, very long climb. So if I'm you, I would swing trade these. If I had to choose and there was a gun to my head, I think I would be looking at Ford, but choice is on you. Catch you on the flippity flop.